This first chart you pulled came from, I guess, as a more graphic representation of some research that Data Trek, who we've referenced in the past, did, and it's pretty alarming to me.
It's alarming to me, too. I mean, look, I keep reading things. Oh, it's not just 7 stocks. Look, at the end of the day, we're going to show you that the markets have been more narrow. And dang it, it's not a real comforting feeling to know that 7 stocks generated 16% of the S&P's return last year. And so, for us...
And more than 20 the year before. So it's been a continuation of these monster stocks. And God, I mean, that's awesome for those guys. They are phenomenal businesses, but it's
very narrow.
Unless you've piled into those names at pretty high valuations, you haven't... maybe recognized all of what's been out there.
And look, I'm not saying anything's going to go wrong, but it could.
Right, it could.
It could. Yeah. And if you don't think stocks will react quickly to that, they will.
Yeah.
And so the big question is now, obviously there's a ton of AI investment. Everyone is now listening very closely to conference calls to see if Amazon or Microsoft or Meta sort of tip their hand to spending less with NVIDIA, which hadn't happened.
Hasn't happened to this point. That's right.
But at some point, it just got to keep your eye on it. Anyway, it's important to know that absent those 7 stocks would have been up 6% last year.
Yeah, or diversification probably away from just the S&P 500 didn't result in the numbers that the S&P put up.
Right.